Hello, crypto friends. Yep, indeed. Got to work out, got to get strong, going for a nice old bike ride break coming up soon. But I'm here to tell you about the crypto markets. And as you will see, I've brought some props along. Yes, my very famous and well-received welding glasses of great cool. And more importantly, as a man of many hats, man of many hats. Yes, the market sniper, the reset sniper, and the crypto sniper. I am supporting a minnow today in the Rugby World Cup. For those of you not familiar, that is Georgia. Georgia indeed, and we'll give them a little bit of a boost. Did pop past Georgia. You should owe it to yourself to have a look. That's Georgia, the country, Mr. Americans, not the state. Anyway, Bitcoin is the game, and I've brought my X-ray gogs to the game, and we are ready to interpret. So you will get a small insight of some of the many things that we enter into through our looms and interactions in our premium area. And I'm going to show you a little bit of an insight that hopefully will help you with your trading, and you're going to get a free peek and squeak at our assessment. So this has been a bedeviling of a kind of structural pattern. It's kind of the worst to have any great certainty. So I've flipped like burger patty meat on the overdone grill. I've dropped my pants and pulled them back up faster than a Thai brothel madam, and so I have flip-flopped. So once again, can utterly be wrong here, and still remain so. It is highly ambiguous structure. So I'm sticking my neck out for all the yay boo brigade to come and tell me how wrong I was in due course. But nonetheless, I still think I have a hunch. I still have a feel. I think the X-ray gogs are working, and along with the great community we have, I think we have decided on our bias. So last time I wear my welding gogs, I did warn you that overall I still have suspicions of a bear market. So for those of you that need a small reminder, it's actually been a while since I've chatted to you on the crypto sniper. Let's go right up to the monthly, and I've cleaned this chart, beautiful people, so that you are not to be fooled. And I've once again looked at this and said, the big time frames give you the direction. Where should I be biased for? And exactly kind of as I've been expecting, the ongoing carnage. I'm going to show you my new fun toy, which is the Epic Pen on this here beautiful Wacom that we use for discussing. So let's remind you, the 20,000. Yep. See that there in red and that there in red. Speak at the mic, Francis. That was key signs of high volatility and major rejection. High volatility and the beginning of major rejection. The first part of the major rejection was the wick on there. In the 2 weeks before, you were covering thousands of dollars in a single week. Okay, that's called a blow off. But that was probably one of the most epic of blow offs I think Bitcoin has had in percentage terms as well as absolute terms. But you still get similar characteristics, slightly less extreme, but when you get fairly substantial blow-offs, but maybe not the blow-offs to end all blow-offs. And I want to point out, and I've said it again previously, that that was a very big $3,500 rejection. That was still over $3,000 that wick. And then you've gone into a further substantial $2,500 rejection there. And the rallies have got weaker. They've come down hard. In other words, there's a wall of selling. There's a wall of selling at these levels. There are folks prepared to take money off the table here. That is right. Headwinds. Headwinds. Not dissimilar from the epic avalanche or storm gales that eventually hit the overzealous, started the year at $1,000, was trying to end it at $20,000. You should understand that that could be expected. And in a similar way, And this is where many people have differed with me. They continue to just see Bitcoin, when you put it on the logarithmic scale, to be something that goes up like this, has a bull bottom, makes a new high, goes a bull bottom, and they have it sort of flattening out with time, so they might have slightly like that. And they're always thinking that in essence you have a blow off high, you have a bear market, you have a basing out, you have a new bull that clears the previous high each time. That is how it is until it isn't, people. That is how it is. And when you get a super bull 10x moment with quite high levels of participation, as you got in that initial run that ran you up to there, you may find that the echo rally or bull market, for which this is, doesn't have the same degree of beans, because people have seen this movie before a little bit more. And you know, what tends to happen is you may get your first big time frame instead of the perpetual ripples that everyone expects with new all-time highs. You may get an event where in actual fact you get such a blow off high that you get your first continuation pattern to make the next new all-time high on your monthly or weekly chart on the big time frames, which broadly has happened and is visible on the daily. But in most instances, if you're looking at the super macro time frames, there's no clear big structure bull market that fails to take out the previous all-time high. Okay, only on the daily can you see little setups that have continued to wind up and work their way up. Eventually you might get a bigger time frame one, and that is going to dovetail with my reset sniper hat. I can only wear one hat at a time, so my Georgian crypto hat is going to have to stay on my head until I have my stack of 3 hats and I can swap them. But the key point is that I'm trying to make is that you may get a continuation here, and this will mean a down leg first before we get the mega of all super spikes. You see, I'm also thinking, and this is the reset sniper hat now on, I'm also thinking about the macro environment where we get a printathon out of the Feds after the Great Reset, which I'm pretty confident they will probably look to do after they have got Donald Trump in for a second term. They love to crash things on the conservative white male, and he's an idiot and an antagonist, and they love to hate him, and they did the same to Bush and all of that stuff. So that means we'll probably, my reset timing is for 2021. 2007 to be 2021, 2008 to be the aftermath of 2022 and all the headaches and the hangovers right into 2009, 2023, and then all that green watermelon communism, red of tooth of claw, but wearing a noble green cloak to save the planet, is going to come in, and then that's going to be wound up into the new Bretton Woods Mark II agreements, etc., etc. But I digress a little, but I want to show you that's a fundamental assessment, and that's where I think things are going to break down for us. So 2021, or maybe the back end of 2020, you know, he gets elected around about November, I think he'll two-time again, and I suspect pretty soon after that they're going to start their all fall down processes. I mean, we've had the repo rate, my God, they were bailing out the liquidity on banks. They're going to just limp home through this election, assuming they make it. The Financial Times spoke of, is it time to start considering reset? It's almost like Carney and the Jay Powell, you know, thinking the unthinkable 10 years after everybody else. Should we end the dollar hegemony with a blockchain crypto? Oh, how novel and interesting. Well, we're starting to get this reset talk coming through the Financial Times. Anyway, I'm getting into lots of narrative. Let's head back to the chart. I just wanted to try give you an idea of how a delay in going up might long run work out for you for an even bigger gift in 2021, because you might get the mother of continuation patterns that could absolutely moon and overperform. But you've got to let it play out. You've got to let it play out. That's speculation. I don't know. I don't have the future. I have my X-ray goggles, however. They fit well. They are tidy, and I see, and my future is bright. Is yours too? Have you watched our mini-series? Go click and register. book in for a chat, do whatever you need. Okay, back to this. So I suspect in the monthly, as I've said before, the sell-off wicks there, and this is a clear wall. This is a headwind that is in there. So that, in directional sense, has got me biasing for bear, and I've said that before. But I did feel a little bit flippy on occasions because it's a freaking descending triangle in an uptrend. It's kind of ambiguous. It could actually pop up. You know, anything can happen, but it's not what I call my typical very high confidence, high probability type structure. So let's have a look in it a little more closely as we drop down the time frames. This is very, very apparent if you see here. And once again, I'll start drawing. Yeah, love my toys here. Let's go pretty in pink. You know I'm about to flip to one of the 99 genders. I might run them all. I might run the whole rack. I've got 99 problems, but the itch ain't one. Because I keep it clean and tidy. Anyway, that's digression. What I refer to as a grind line. I've got a lot of HVF specific methodology lines on here, so I'm doing it with a clean chart. You can see I throw tons of alerts so that I get notified. So I'm going to show you what I'm prepared to show you with a free draw like this over here. You want all the detail. We do that for our premium guides. Grind line, it's low, it's flat. In fact, I could have even drawn it like that. That's kind of messy. Let's try again. We refer to things as grind lines. We define them for you. You can learn more about it. But essentially, that is clawing its way marginally up along its lows. And there's immense compression that has come across the top. Ergo, those monthly wicks. So this is once again pointing out we're getting to the arse end of some serious events that are about to go down in terms of this. By the way, something, a free tip that we use is you can utilize as well this indicator if you like. It's very interesting. I'll show you on the weekly time frame. It tends to give you the key moments. So we are volatility traders. And if you go, let's not do indicators, it's compare, it's an index. I'd go for the 24-hour and I'd put it on, and I don't like it like that. So take him off and go add symbol rather, B vol, and do it like that. So you get him kind of like an indicator below. So let him fill in there. And I'm going to take that off. Green's an awful color for us. Delete, and there we go. So what is this? A little thought for you here, and it's something we illustrate. I'll clear my face as I move the chart around. My lines move with me. A little thought for you here is that whenever you're at the extremity of the BitMEX volatility, last 24 hours, it's the derived market. Whenever you're at the extremity, I'd typically say, for safety's sake, you want to have, when you start approaching one, this is something that in our community, there's many other things we do that are interesting, is very, very low, and you're typically about to get a very impulsive move. So if I just change that to the value of 1, you'll see when we have had highly noteworthy events of volatility orientated breaks, and as I've said before, you're sick of hearing me say it, but we were literally the only man in town that called that a bear. Everyone else was in the bottoming camp. You had just dipped below your one volatility, so it was warning you that the big move was coming. You had spinning tops. We talk about a lot of these smaller patterns. You'll learn a little bit about them in a program if you want to learn, and then of course you got the capitulation. So this was continuation. Many are comparing these two structures. There is one key difference here. This was downward into here, making this a continuation pattern. We were quite comfortable, although it took a long time coming, and we got spiked and ate a little bit of red on a wick there with the Bitfinex tether shenanigans, but we still ended up well in the butter after the breakout. So it's never easy, but super low volatility. Then you got your first setup beginning in a new trend, and let's leave it on red. That was it. And you had that ascending triangle structure, very strong ascending triangle structure, and your break began to come from there again. key move. Now the difference between that and that is that that was the first setup in a new trend. In other words, we'd begun a bottom. And the good thing about that is this was a much lower volatility structure. That is bullish when you get a lower volatility overall structure. When you have high thrashing structure, aka up top here and here, there's also an inherent bearishness implied in high volatility moments at very key levels. So this was, whilst it was a squeeze, it had very, very calm, what we refer to as funneling there, and a structure there. We didn't wait, we didn't get in early here, we didn't execute as well here. Why? Because it was first structure. We don't want to be the first. Once we recognized which way it was going, we got in. We got in largely there, but because we were aware it's going to be the first in the new trend, we stayed long most of that. So we certainly made plenty on the way without having to be the first in. So note the differences. Many people that have been looking at this overall structure have tried to do mental association. In other words, people are lazy and we call it association. They want to go same as that. Same as that. And it isn't the same as that. They want to do the mental association and it isn't there to be done. There is none of these are actually identical. There are characteristic traits that are similar, but none of them were in fact identical. So we've shown you that as you dip beneath the low ones on your volatility, this means this might calm a little more before it does what I suspect it's going to do. Overall, we still believe or assess, I don't like the word believe, by virtue of our technical analysis that we've done, that it will resolve to the downside. Yeah. But we could be wrong, and we are saying absolutely this is one of the trickiest. In other words, I have less confidence on the outcome here than I would there. But on balance of probabilities, because it's such a core market, it's such a key moment, I need to have an opinion of some form. I can't just ignore this market. I've kept quiet, I've watched it for a bit, and here's your three examples. Bullish, first in a new trend. Now, these two are almost inverted opposites. If you invert the chart, guess what? You're not doing enough chart inversion. It eliminates your bull bias. Retail traders particularly have excessive bull bias. That is an absolute fact. Invert that scale and you can now look at the fundamentals of what happened more easily. Now you are looking at a chart and you can see the bull break, that was the 6,500 to 3,000, aka the inverted bull break. You can then see the descending triangle reversal. Very low vol, kept tapping on the floor. Kept tapping on the floor, away, getting sucked ever lower. The only difference with this, because it's obviously a bullish event that I've now positioned as a bearish event, is that it was low volatility, while this one has been more thrashy. So when you look at that, you've got to find yourself asking, is that a downside continuation or could it break to the upside? If you think it's upside on both way rounds, you have a bull bias. That is the simple case. This is more volatile than that, and that is typical of structures that normally fall downside, while this was quite stable and squeezed its way in a very nice low volatility manner before going its bull run. But it's weird to talk about it like that because you're looking at inverted. So these are diametrically twins. I suspect bull first and bear first. They are polar opposites. We will see if that turns out to be right. This is a more thrashing version. This was a more calming version. That was a bull, that was a bear. But in actual fact, we're looking at the wrong way around, and I'm now provoking your autism, your dyslexia, and everything else. So I'll turn it back to the right way around, and I'm done making that point. Okay, that's kind of super macro. Wow, that went quick. Let's go into the smaller time frame. So I'm going to show you a little observation that our top-notch, Top Gun team in the premium realm have been working on as we've been positioning, that you've been missing, and you're going to get a sneak peek tonight on that which you miss in terms of what has been happening. Now, so we're talking on the macro bias slightly bear. So in terms of my view, everything that happened from this high point, which was in fact a falling wedge, but it had a very choppy session of sell-offs that were rejections, two distinct rejections, an attempt to retain, failed to make a new high, and another rejection that took you low. And then you base plated. We call it base plating. You got essentially what is a double bottom. That is because you're just through the key round number. Now the psychology of the 10K weighs heavy on this structure. The psychology of this key level of significance, the 10K, weighs heavily on everything that is going on in here. This is the bomb. Because there are people that are seeing it as last chances to buy Bitcoin sub 10K. So we've had a block of buyers come in here, rejection, it revisited, rejection, and it rallied out. And you've had a block of buyers come in here, and it rejected, but far less. And you're getting what I call the front runners, slightly keener FOMO value buyers that come in a little bit earlier to try get a little bit ahead, but still sub 10K of the block value buyers. That's where it is. So you've got hard floor and soft floor. Now I'm going to take you into the fractal. So for me, this entire impulse is potentially the concept of a reverse trend into that base floor. And now I look at everything to the right of this point as a continuation pattern of a newly established trend. That's it. That's how I'm analyzing this for the bear case. I do it differently for the bull case. So all my data sets are now based on the continuation set pattern commencing from here on the basis that this event of great volatility and then hanging on the 10K level, there she goes, being critical. Let's wipe our face because we've got dirty again. And let's take you into that so that you can understand a little about what we get up to in our premium area and why we come to the opinions we come to, and how you too can have the X-ray goggles and wear a funny hat and be foolish on YouTube. Okay, so since we made that low, which is very close to the other low, this is what happened. I'm going to use the colors because you only get to be a child once. And for me, that's forever. Whoops, we need the drawing pen. This was your lusty and strong up move. There was another period when you came here where you got a lusty and strong move, but not nearly as strong. And then there's been a third period where you've had a lusty and strong move, but again, not nearly as strong as the other. So the plunge protection buyers that coming in at the low end of the market are coming in very strong, moderately strong, and kind of weak strong, if that makes sense. Okay, what happened? Well, there was a period where you had, when you got to a certain level, you got nasty slap in face events. You got the same warning there and then there, and you got that wick there. So that's when the line was drawn and the resistance showed up. Yeah. So the resistance showed up here, here, and here, and there was clear price action events that illustrated that. Okay. Now I'm going to talk about the man peas off the roof pattern, which is very bespoke to me. You should always try peeing off a roof. It's most satisfactory. The higher up, the more interesting and fun it is, particularly if the people below notice it's you and that's what's happening to them. So that is the convexity that goes with that. And here you have it as well, the convexity that goes with that. And here you have it as well, the convexity that goes with it. Peeing off the roof. Now, before we got to the point that convexity and the peeing off the roof ended is what I'm calling our soft bottom. So it was an attempt to make a bottom, and you got your soft bottom there. Remember, our hard low initially is down at these levels. Over here, same thing. It looked like the soft bottom was in and it was done. What actually did you get? You actually find people got this grinding along here and structure. You got grinding along here and structure. Can incorporate it as one, in fact. And then there was a second stage to the selling that finally gave you your hard bottom for how far it was allowed to fall. Boom. Again, boom. Into the hard bottom. So here, hard low after an attempt at the soft low, hard low. So this is what happened. A couple of times, folks try to get in early and get the sub 10K Bitcoin. Remember, that's there. And they jumped in front of the hard bottom buyers. They couldn't hold it up. They tried, they huffed and they puffed. They tried and they huffed and they puffed. Can you see that there's a similarity in here? Can you see there's a similarity? Have you got your X-ray goggles on? Yes. And then after your hard bottom, that's when you get your bullish move and you get your slap in face events, hard sells, as we had there. Now, the key part is you're seeing a fractal from here that is emulating the other one. That emulates everything from there to there. Now, we've put in that hard bottom, and you might be asking, so where in the map on the repeating fractal are we now? Where in the map on the repeating fractal are we now? And as one of my astute premium members noted, how far did we rally when we had the green line? Well, you'll note this fractal in orange of a squeeze that then led to the hard bottom low after the soft bottom low. You'll note roughly to the top of that. How far did it go here? Roughly to the top of that. Interesting, you might think. I think that was a very good observation, and now you get to share it, and you should consider yourself lucky because you're missing loads of them and you could have more of them. But you got to value it and you got to become a sniper. Anyway, let's go into this third impulse and talk about what's happening in there and how, in terms of the rest of the fractal, have we done. Okay, you got all that? I'm going to take a picture because it's a pure Picasso of great genius and value, and then I'm going to take you into the smaller time frame to show you how far we may already be in terms of the third impulse. So that'll go into our premium area again as a draw, a coat of many colors, and I will save that. Let's talk about a lower time frame now. So I'm going to have to squeeze this up. Let's try do it on this current time frame and just show you how far we can get before we drop it down. So you'll note you got a slap in the face event there. You went convex. You try to hang on. You then spilled rather brutally. You actually, if you drop the time frame, which we certainly did because we watch like hawks. In fact, I even posted this little setup in the premium area and said, I think we're going to get one more test down for that hard low. And that is exactly what happened. Note, each of these lows all on this marginally ascending, what we call a grind line. And what happens to grind lines for us? Hunt volatility method theory says they give way. They give way. This horizontal zone trying to hold the 10 and this meek, mildly up, harder lows gradient, which is very mild, and this extreme compression, regardless of the up legs that have been fairly zippy, they have in fact been losing that zip at an alarming rate. And these little green arrows that you see are getting smaller. So we are currently at the point where A, we might break, or B, you might get one more little green arrow How far might it go? How far did these ones go? Grey line to the squeezy Japanesey. Like that. Maybe you'll get a limit fill there. Maybe. It could just go. It could just go and sell off. At some point it stops playing. But we've spotted what it's been doing, and that gives us comfort, and that's what real fractalized assessment of a chart eventually gives you. It's the great puzzle that we have to solve, and having many minds and well-trained traders gets you to the answer. So that's potentially where you might be able to get a limit order, just sub the 10.1, in and around the 10,071 mark, for example. Now that's a key level of significance for us, and you'll have to find out why. Very, very interesting one that holds very, very clearly for us and has great significance. Now, all in all, with this masterpiece of color and assessment, I hope you've enjoyed that. It's already 25 minutes, half an hour long video. Why is my video so long? I'm sorry. I like to do it properly. I like to do it in detail, and just watch it at 2x speed if you're a junkie that's on adrenaline and you know, crystal meth or anything like that, and just watch it 2x or 2.5x if you have to. So that's where we are with Bitcoin. We have further understandings of what we take next, further applying this fractal. We have methodology that might say we might repeat on ever smaller bases this fractal for a while longer, and we'll be watching for that. Where will it go if she goes down sub 7K? We have 6800's as targets, as full targets. We expect it to rest after running the 8.5. That is all available in our premium area as to why, where, and the wherefores, plus why the 10,071 is an interesting level. But if you want to find out more, pop over to the Market Sniper website. Come and get yourself a pair of X-ray goggles and a funny hat. Until I catch up with you next time, we think bear. We could well be wrong. It is not advice. This is a tricky pattern, but I hope you've enjoyed this assessment anyway. Catch you later, and if you haven't got a team in the World Cup, you shout for the Springboks, okay? That's it. Catch you later. Bye-bye.